This is a expense ratio discipline agent. So the operational expense ratio do not spike suddenly. They drift due to the inefficiencies during the execution. So this agent maintains the expense discipline by detecting the cost breaches in the real time and recommending the immediate corrective action. So let us test the agent. Here I asked the agent to show the processes where the expense ratio exceeded the threshold today. Here the agent identifies the process where the expense ratio have already breached the threshold today. So it highlights the key driver signals such as the high manual handling, then uh, large exception queues and the resource strain. So each breached process is clearly mapped with the some recommended action and the current execution status. So these issues are detected during the execution, not post review. Here I am asking the agent to recommend the action for the processes with the breach expense ratio and why. So the agent now consolidates the action at the process level and explains the reason behind the cost escalation. So across the uh, processes, the breaches are driven by the increased manual work and the rising exception backlogs. So this will directly increase the processing time. So the high resource utilization indicates the imbalance requiring the immediate redistribution and the removal of the low value workload. So these recommendations are applied immediately by preventing the further low value workload. So why these actions? As the manual handling increase the effort and raise the cost per transaction, while the exception backlogs created delays and the extended processing time. So the higher resource utilization reflected the workload imbalance and inefficient capacity usage. So these combined inefficiencies cause the expense ratio to breach the operational guardrails during the execution. So here the expense ratio stabilize without the reactive cost cutting and ensuring the discipline during the execution itself.